Buenas tardes a todos. Hello, everyone. Thank you for the invitation to participate to this Value Conference. First time for me, I attend this event, so thank you very much again. I'm very happy to attend. Independence is quite confidential, so I'm not sure most of you know the company. So what we were suggesting is very quickly to recall what we do, who we are in the first place, and then go to the case study, because in our case, in the strategy we implement, the case and the investments we make are really mostly a result of the strategy and the criteria we use. So let me explain you a bit first what we do and who we are before we jump to the investment case. Independence AM, so we are a value investment company, portfolio management company, but with some specificities, because we only do it in the area of small and mid caps. So small and mid caps, as you know, that had, let's say, difficult performances in the past few years. We managed to go through this situation not too badly, implementing the same strategy we've been doing in the past 30 years. And I will explain you a bit why we think value investing in small mid caps is not dead, and how we can manage to have good performances even in an asset class that's not outperforming, and with a value strategy that everyone must know here, but can be sometimes criticized or not well understood by a part of investors. So boutique, 100% family-owned, entrepreneurial, 100% specialized in small mid caps, and with a particularity of implementing a value strategy. I like to say a value strategy because even from what we heard today, value is a very wide terminology. It can go obviously from deep value, value. In our case, we call it more quality value for the criteria we use. So we know it's a very broad spectrum. And in our case, to explain what we call quality value, because we don't think we own the truth about what is value or even about what is quality value, obviously. But what we are looking for in our case is very exclusively companies that develop. We like to really insist on the word develop, on the growth, but develop in a very profitable way. So that's really important for us. So companies that are much more profitable than average and a growth trajectory, but that are at the same time with a much lower valuation than the market. Because same, when we call attractive valuation, it can mean pretty much anything. So in our case, we really look at companies with a factible multiple discount compared to the market. And why we do it in the small mid-cap sphere? To be honest, we would be very happy to do it, for instance, in the large caps, where it's much easier to come, more liquidity to buy and to sell. But it's true that historically, it's in the small and mid, and even more in reality in the micro and small cap world, where we find the most of those much more profitable companies with growth trajectories on average and with much lower price, because at the end of the day, it can even appear to be an anomaly. To finish quickly on the company presentation, we do it in our case with different vehicles. Micro, small caps, we do it through closed-end funds. It's very complicated to address efficiently this asset class today with UCITS funds for liquidity issues. So in our case, we do it with closed-end funds with engagements from investors on 5 + 2 years. Then we manage some small mid-cap funds. I didn't say it, we are a French management company, so our historical fund is a French fund, a UCITS fund, and we also manage a Europe fund and then some institutional mandates for investors who don't like to be in collective investment vehicles. To finish with the strategy, to explain a bit when I was calling quality value, so that you understand a bit the specificity of what we do and how we cope, how we analyze a company when we do it. We really think about two levers, the quality side. And here, as I was saying, the first thing we look, and the first really preoccupation we have when we look at an investment with a long-term perspective is, again, but like everyone, I think, in the room here, looking at the quality of the company, the fundamentals, in our case, a lot, return on capital employed, operating margins, growth prospects. This is the first thing. And when we talk about small caps that downperformed quite heavily in the past few years, it's true that in our case, we were not that much affected because on the quality side, the economics, we invest in Europe. European economy has been quite strong in reality in the past 3-4 years. And so what we didn't have on the value side, which is a bit this re-rating opportunity, we really had it in our case on the quality side, because companies have been growing really profitably with record profits for most of the companies. When we see at the end of the day, 2020 States helped a lot, 2021 we had a very strong rebound, 2022 was actually better than 2021, and where we now have the close ending season of results, 2023, small caps are always a bit late, we don't have all of them yet, but results seems to be even stronger than 2022. So having those two levers, quality was really strong in the past few years. What did not happen is the value lever, which is the idea is that you cannot have a company which is much more profitable than average and that is growing, that will forever be much cheaper than average. And this is really the value lever, the re-rating opportunity. And clearly, we would have talked 2 years ago, I would have said small caps are cheaper. They're still cheap, but in the meantime, earnings have increased a lot. To finish a bit on this, why we do that on the small cap area is really we like the fact that most of the time in small caps, you don't need to have an arbitrage between quality and value, which is obviously one of the main constraints that value investors have, is if you don't want to do deep value, at some point there is a valuation. If you want to buy cheap, there could be a reason, and sometimes you buy cheap because there's an issue with the quality. The more small cap you go, even more micro cap, the more you can find really companies that really don't have any problem on the quality side, but are really cheap at the same time. Long-term results, being disciplined and staying in this area has been strong for us in France. We have a 13% annualized returns implementing this strategy over the past 30 years. And when we extended this to Europe 5 years ago, we actually did even a little bit better with 14% annualized returns in the past 5 years. And so plus 50% in 3 years, 100% in 5 years. Again, in a period of time where small caps were quite down-performing. And to give you a bit an idea, the median market cap of our funds is around 400 million euros. So really, depending, I talked to US investors a while ago, and for them, 400 million euros of market cap was not even a micro cap. So it depends obviously on the acceptation we have. Let me now bring it to an investment case where we have, actually I have two, to give you two very quick illustrations, because we don't like, in our case, to talk most of the time about a single stock, because we really think about a portfolio as a whole and trying to have a discounted portfolio compared to market average. But I think it was from a Christian expectations, trying to find, we are very micro cap, so sometimes companies, if everyone here wanted to invest, we would have a bit an issue on the liquidity side of things. So we tried to show a company a bit bigger, which is Sopra Steria. And then I have another example very quickly that I will show you on the more habitual things for us, which is really more micro small cap. Sopra Steria, for those who might not know, if you don't look too much at the IT sector in Europe in the equities, is a mid. For us, we would call it a mid cap. It depends obviously where you put the limits, but 4.5 billion euro market cap. I think is a good illustration of how we reason when we look at a company, and really how we look at those two levers. So they do a very generalist IP services plus a BPO activity in the UK, which is quite efficient. What strikes us when we look at a company like that at the moment, so this was early 2024, it's changed a bit in the past few days, but that was really the situation a few weeks ago, is you had this company, if you look at the EBIT trajectory, you see expect 2020, because of COVID, really nice earning per share and EBIT growth very steadily around plus more than 10% growth of earnings per year. So really a very sound company. But what for us is sometimes a bit amazing is you have it on the value side. Again, the second lever we look, the total absence of consistency of multiples. Most of us, we read equity research. I'm always very surprised when we read things about a company that's priced, let's say 12 times price earning and used to be 15. And you know, equity research will always put forward this argument saying it was a 15 price earning, now we're 12, so we should back to normal. Or, you know, the peers are 15 times, this company is 12, so it should come back to the average. Clearly, in 30 years of doing this, we've never seen any kind of stability in earning multiples, which can be an issue, but can be also an opportunity. And here you see just a trajectory of price earning of this company in the past 5 years. And you can see a total decorrelation between EBIT growth, which has been good, and EBIT and price earning multiples, which have changed totally from year to year, from month to month, sometimes from week to week. In our case, as I think I tried to make it clear, the idea is to buy a good quality company, really at a low price, at low multiples when we enter. And the idea being that, you know, or at least on the quality side, you're making a good investment. In this case, this company has doubled almost its EBIT in 5 years. But you can also even increase your profitability if you have the re-rating happening. Sometimes it happens. It's a value lever, so we don't control it. Sometimes it doesn't. And clearly, in this case, you see what we've been doing with this company, which again is a bit atypical because normally re-ratings in small caps are very long. And in this case, you have a company where we have been able to disinvest several times in the past 5 years because of the way the market, again, is simply evaluating those profits. And so you can see we bought the first time at the beginning in 2018. It was around 9 times the multiples for a really nice and sound company in a good sector. It became expensive post-COVID. It really became cheap, of course, when you know that small mid caps have been declining a lot, especially in the autumn 2022. Became again expensive last year with a lot of M&A that we can argue of the quality. They did a very big M&A compared to their size, buying Ordina in the Netherlands, which actually we were also investors. So for us, we were at the same time happy for the fund, but a bit worried for Sopra because we thought they bought it at a very expensive price. And again, for no particular reason, the company was cheap again this year. And this is really how, at the end of the day, you had EBIT multiples by 2, but at the same time, if you look at the market cap, it was multiplied by 3 in this period of time. And this is something we try to exploit, you know, this total absence of multiple stability and trying to have, on the quality side at least, always make a good investment, and plus this re-rating opportunity. To show you, I will do it very shortly, something more classic and the typology of company where the re-rating is much lower, but we're even more happy to have those two levers, is a Delta Plus. Typically, you can see here a few pictures of the activity. They do protection equipments for workers, so it can be gloves, helmets, shoes, or when people work in heights, so all the ropes and I don't have the word in English, but things that protect you to fall in height works. So not very B2B business, small, very fragmented, not the kind of business that most investors are very excited about. And here you have exactly the same story. We like to showcase this company because we've been invested continuously for the past 17 years in our funds. And typically, very good for us quality value example, where you have this company that has absolutely no particular problem in a very sound business. There's always more protection of workers, which is obviously a good thing. A bit slower, so slow growth in mature markets like Europe, double-digit growth in emerging markets where we come from very far. And this company is present in Europe, but also in China, in the Gulf countries, and Brazil, Argentina. So for it's a small, very small family business company, but already very international in reality with 500 million euro market cap. And as you can see, very sound, very regular. I think any private equity we would dream of such steady EBIT development. Here you have the past 10 years, but we are invested in 2006. You have the same if you had started 10 years before. at the time, obviously 10 years ago, the market cap was only 60 million euros. So really we have the ability to go very far in the microcap segment when we find good opportunities. And as you can see here, for a very, very sound business, we bought it 7 times the profits, and it's never been very expensive. And in this case, for us, the strategy and the way we implement it is really to keep, as long as the company is not too expensive, and on the quality side, we don't have any particular problem, to keep it really as long-term investors. We divested a little bit because quickly, as you can see, it went above average multiples during COVID, because a bit by chance, because they were on this protection business, they were selling a bit of masks, protective masks, very negligible for the activity. And obviously there was all the security research trying to find the companies which had a bit of COVID exposure. So it went up very quickly. And now we're back to multiples that are sound. And for us, it's maybe we see each other again in 5 years and we will still be investors. That's it for the explanation of what we do, and I'm happy to take a question if there is some. So I guess it was very clear.
Seems so.
Thank you.
Thank you so much.
Thank you, everyone.
That's it.